Good evening and welcome to the Accendo Trader Group. This is our daily stock market trading plan for Wednesday, December 30th. Our website is blog.accendotrader.com where we put together video technical analysis trading plans on a daily basis, which has been a pretty hard thing to do this week because what are we analyzing? Light volume. So how valid is it? So we look at today and we saw that the dollar initially continued to gains from the end of the day yesterday. So what happened? The correlation of the dollar and the market is that the market was down 40, down 30 at open. And then at the end of the day, it kind of gave a little ground. And what happened? At the end of the day, we had a little rally. But overall, the market failed to find leadership. We didn't have financials. We didn't have the text. Nothing was leading. And so we consolidated in between the range for once we had that move up to bring us to break even. We kind of consolidated for the rest of the day. And that's because we had lighter volume. Once again, we only had about 600 million shares instead of over a billion. Only 3 sectors were in our positive, and you can see there it is. But again, we were down for the most of the day. Nothing on the earnings front. We did have an upgrade on NVIDIA. Tomorrow we have initial claims. Nothing on the earnings front. Let's take a look at the charts. So let's first start off by looking at our 3 indexes, the Dow, the NASDAQ, and the S&P 500. And we can see that here we are starting below market open. There we are rallying off. That was our gap trade for our futures trader. And then you can see we kind of consolidated for the rest of the day with the end of the day rally. Same thing here on the other 3 markets. The other thing we can see with our Rubik's Cube that I like to call it is we can see again we have a kaleidoscope of colors. Notice that Microsoft is pretty red there, but Goldman Sachs is green, which usually is good for the market, but overall the financials are kind of mixed, and that was the type of day that we saw here. Once again, we still see that we had more declining stocks than we had advancing. We still have a ton of stocks making new highs, 96%, and we still have a ton of stocks above the 20% moving average, which is certainly great. But overall, again, we had a blah day, and we'll look at that in the volume. We're going to skip the market internals again because, again, on such light volume, we're not really going to get anything from our internals. So we're going to hold that off until Sunday as we go into a new year, and let's just go straight to the charts. So here we are again looking at our Dow Jones, again, and even though this is so deceptive because for the past 2 weeks, we certainly had a nice uptrend, which is great, and that uptrend took us above our 10,500 consolidation breakout. But this was all kind of painful, and more importantly, it's on lighter volume. And so, we know stereotypically in the stock market, we say an up move on lighter volume is bearish. So when the traders come back next week, we'll see what they think about this little breakout. One thing I do want to point out is that, I had a friend over today, and he's beginning to trade, and we were going over a couple of things, and he was showing me some of the stocks that he was in. And I said, well, just pull them up, And one of the things I was really trying to get him to do is go check out the video on my site about how to confirm trend. And so, he showed me a couple of stocks, and I said, well, and we were looking at the daily, and we were looking them at the monthly and whatever. And so, I'll do it here. So, here's the Dow. What are we in? We're in an uptrend. Great. All right, so let's switch this over here and take a look. Switching on over here to the monthly chart. Now, what are we in? And so it was kind of funny watching with him because, it's like, now the stocks he in were not just great going up there. Most of them from this point on went straight to the side. So long term, we are in a downtrend. We can't forget that. We are in a downtrend. We are finding resistance at the 50 moving average. What is great about this move is that you can see we are taking out this big push down. A little bit longer to get rally. We fall faster than we rise, but we are taking it out. That is great. And we've been saying for the past couple of days that this 1926, this 1900 is our target as far as if the move is going to continue higher using this kind of action resistance going on right here. But again, it's all almost for naught because we don't know what the traders are going to do next week when they come back and see what we've done while they were on holiday. Here we are on the NASDAQ. I mean, look at that. That is a big breakout move. Look what the NASDAQ was doing for the prior 2 months. Nothing. I mean, yes, you see up and down moves, but for the most part, especially here, right in this area here, you can see we weren't doing anything. And then so the holiday trading session on lighter volume comes up, and what do we see? The market takes off on the NASDAQ. Well, what are traders going to say about that when they come back? I don't know. Don't know. Here's the monthly. Above the 50, the NASDAQ was always higher up than the Dow and the S&P 500. And again, we were looking at the 2300 level if this were to continue as an area of target or the next area of resistance. Finally, the S&P 500. Here we're basically seeing again another little breakout on lighter volume. We broke above the 1120 was our breakout level there. And on the monthly charts, we're not at the 50 moving average yet, so there will be our target if this were to continue when the trades come back next week. I hate to be kind of disingenuous or kind of wiffle-waffly, but again, this move, this past couple of days have been when traders, a lot of traders, think about this. Two things. A lot of traders don't want to sell their positions right now because they want to avoid some of the 2009 taxes. If they wait to sell their profits come January, it goes off into the January. The other thing is, again, a lot of people left. That's why we have a lot of volume. So, this last couple move is really, we don't know whether or not it's valid or not. Since there's not as much to discuss about tomorrow's trading and what's going on, I want to give you an intro of what I'm going to be releasing this weekend. This weekend I'm going to be sharing a couple videos, and one of them is about Heiken Ashi candles. So I want to give you an introduction of what it is. So I want you to kind of look at all these swing lows and swing highs and look at the candles. So right now I have candlesticks up, and I'm just going to go ahead over here on my Thinkorswim platform and change it over to Heiken Ashi candles. And you'll see the difference. And a quick summary is that the Heiken Ashi candle is an average of the last previous candles. So it's not about the previous low and high. It kind of takes in the weight of the previous several candles. And then notice that the green candles are hollow and the red candles are filled in. And finally, notice that on our swings that eventually, when the color changes, we go the other direction. These are really beneficial to our futures and day traders and our swing traders for noticing swing changes. But again, I just want to give you a quick introduction, and I want you to look out for the video, a full detailed video coming out this weekend. Okay, so let's finish out with Trading in the Zone by Mark Douglas, and we're going to take a leap, skip a couple chapters, and go to chapter 11, Thinking Like a Trader. And here Mark talks about what can you, if you were to sum up trading, what is it? And he basically says it's about pattern recognitions and it's about probabilities. We use market analysis, technical analysis, to identify patterns, head and shoulders, double tops, 3 green arrows up, 3 red arrows down, whatever indicators you use. And then we define the risks. We identify support and resistance. And then we determine when we're going to take our profits. Now, with the probabilities, we understand that sometimes we have to pay the cost of doing business and be stopped out, and other times we're going to take our profits. And so we know that we have to identify our patterns, put our system together, and let the probabilities with the number of trades prove out that over a time we are going to be profitable, we're going to make money. Simple. Recognize your patterns, execute the trades, move on. But we know that trading is not that simple because our emotions get involved, and they either hide information from us because we're in a trade and we don't want to be wrong, or sometimes and they information that was there the whole time. I mean, how many times did you look back and say, "What?" A friend of mine came over today, as I was saying earlier, and we broke down a real simple 5-step system for him. And I said, "This is trading, but there's so much more that I could put on you. But if you can do this and master this, you'll be so much further ahead of everybody else." So, for our futures traders, we got a futures room, 10-day trial at $29. I can't believe we made several trades on that big move in the morning. So, even though we shouldn't be trading. We got a futures broker, E-mini, margins of $300. Check that. You won't find anywhere else. And we have a futures trading plan to help jumpstart your trading. Hey, guys, if I don't talk to you, have a happy holidays, happy New Year. And I will see you guys this weekend with our New Year 2010 kickoff video. Trade at your own risk.